disappointed in myself. Extremely disappointed in myself. All right, so I just posted the road to consistency video, so everybody go ahead and check that out. Watch that for me. So now we're gonna get into the nitty gritty. Stupid me. Yeah. All right. So watch that video first if you haven't. Um, if you have, then you're here for a good reason. So let me get my notebook and my MacBook. Always do this when you are recapping your trade, because this always helps the most, right? You're gonna wanna log your trade in some type of trading calendar, to make sure that you are keeping up with how much you have left in your account and what you can continue to do, how you can continue to trade, how to de-risk, how to risk manage. So for me, I use Notion. I have a whole thing coded in um, as my own like trading calendar. I don't know if you're gonna be able to see it, but I have a whole trading calendar, not sponsored. But yes, so Notion is really good for putting things like calendars in to see your own P&L for the day, for the week. Uh, so yeah, um, if you did see my last video, the road to consistency video, um, I was an idiot. I ended up losing about $627 on the day. And I should have actually won. I should have actually won 3 trades, but I actually I lost 2 instead. So, little old me. I don't know why I was taking trades like this. I need to fix it. I saw this bullish open right here on the 9:30 open. I saw this bullish push, and I thought, okay, we are seeing bullishness, right? But then I forget over here, we saw major bearish price action from Asia, right? And then over here, we saw bearish price action from London, London delayed protraction, right? And I should have known we're gonna be more bearish or more easily able to take bearish trades. So little old me was an idiot. We saw turtle soup potentially right here off of this buy side liquidity. Um, Let's not mess up, please. Uh, so yeah, buy side liquidity here. We see a turtle soup because we haven't swept out this high yet. Okay. Um, no, don't get rid of my indicator. Okay, and then we see obviously we get the turtle soup happen here, right? And then we took out sell side liquidity right here, right? So 9:30 open, I shouldn't be looking for that same turtle soup anymore because we already took out the liquidity that we were targeting, right? Why? What the heck just happened? Don't do that. Don't do that. Okay. So now we see the bullish push on 9:30 open, and we take out highs here. We take out highs here. We just took out all the highs, right? And then if we look on S&P 500, we did the same thing. We took out every high that we had, long-term highs and everything. And then we see Dow Jones, we actually took out lows instead, right? So really, we don't have a full determined direction yet, right? But then we see velocity happen bearish right here, right? And I need to start writing my notes actually instead of just talking the whole time. But yes, we see velocity bearish, and off of that bearish velocity, um, I should have understood that price wants to move lower because delayed London protraction shows bearish movement, Asian shows bearish movement, and we then see slow, very slow movement, bullish, right? And in 3 candles, we got 99 points of movement. But for the bullish move, we see about 80 points of movement in 7 candles, right? So double the candles for 10-ish points less, right? So let's write this, right? So in my journal, I'm gonna write the date. What is today's date? It is May 11th, 2026. So what am I gonna write in my notes? Firstly, I need to write that I should have stuck to my initial analysis, which was saying that price was probably going to be seeing bullish price action, right? So I should have stuck to my original analysis today because I would have been done early and safely. Now, why am I writing as I'm also recording the video is because um, writing it down helps you remember a lot easier. So if you're trading or if you're trying to learn how to trade and you're you're taking notes when you're watching videos, but when you're taking trades, you're not taking notes, and when you're done with your trade, you're not taking notes of what you could have done better, what you did wrong. You're not going to remember it as easily. And you can say you have a stellar memory, whatever. I have a great memory. My memory is amazing for things that matter. But whenever it comes to like months and months and months of compiling different trading days, trading notes, writing it down will make it 10,000 times easier during the next trading day, right? Um, so then next, what should I have also done here? My next trade, I actually had positions set out for this one. I had a buy position here for 2 contracts on micros. I had another one here, 2 contracts on micros. I had one here at this level, around this level, 2 contracts on micros, and I had one down here on Sunday open. I would have been in for three, and with three, I only needed to target about $918, I believe it was. And $918, 3 contract or 6 micro contracts really. So six, so half of one full mini would be $5 worth. So half of that is 250. Um, so 250 plus the 50 cents for 6 contracts. So it would be $3. $3 per position, right? So I was targeting 918. So divided by $3, I would have only needed 306 ticks, which divided by 4 ticks per point, it would be 76 points, right? And my average position probably would have been out to around here, right? 76 points. I mean, we got 100 points within that move, right? I would have been able to catch that and been done with the day. Um, and then same move here. I should have seen that this slow bullish velocity would have provided for a bearish movement. I should have gotten one in at the 50% of this fair value gap, one at this the order block wick, one at the 50% of the order block wick, and then one at the order block. That would have been 4 positions. I would have had one more, probably somewhere like 50% of BPR, but then my average position would have been maybe like around here, right? And I with 10 positions, that's $5 per point, right? Targeting 918. Only targeting 918 because I lost a trade beforehand, by the way, which we'll talk about in a second. But anyway, I would have been targeting 750. But because I lost that trade, I was targeting 918. Divide that by $5, which is $5 per tick, right? I would have needed 183.6 ticks, which divided by 4 ticks per point, it would have been 45 points. Actually 46 points rounded up because it's 45.9. But this whole move was 101 points. It would have been I would have been done within literally 2 candles if I had gone in here, right? Yeah, but 46.5 points right there would have been perfect. Did I do it? No, I should have seen it, absolutely. But you know, you make mistakes, and you learn from them. So why did I lose earlier? I lost over here because I saw this bullish movement and I got a little scared that it was going to continue moving. So I said I want 930 open to be a breakaway gap, which is just a gap that doesn't get touched. And it was a breakaway gap, right? 931 didn't come into it at all. And then I said, okay, 931 is going to be first presentation, which it was first presentation. And then we see 932, we create the first presentation, and I'm saying we see price consolidate here. And I don't know what I was thinking. I said that I want 931 to be a breakaway gap as well, which I don't know why I would have thought both 930 and 931 would be a breakaway gap. It was dumb of me, right? So then I took a trade, I believe, around here, and I had my stop loss right there, just before the 931 fair value gap, right? And I immediately got stopped out, right? I was only targeting like 40 something, not even 30 something points, because by this point I was only targeting 750. So then I got immediately stopped out, which I lost 130 something, 180 something. I don't remember. Just 100 something points or 100 something dollars, right? And then I put positions down here for bullish, and then I saw price slowly move up here, and I was like, okay, well, with this slow movement, I expect price to respect this liquidity void and then push lower, right? And I said I expected that, but I don't know why I just didn't take a trade for bearish. I would have been perfect, right? 100 something points is great. So then I was like, okay, whatever, right? I then put 5 contracts at this fair value gap and 5 contracts at this order block, right? And I said, I want price to retrace and then push lower to take out daily lows, right? Like I ultimately want daily lows to be taken out. And then I was like, you know what? No, price is moving away from me. So I'm going to close those trades, and I closed those trades. I don't know what I thought. I just didn't open any bullish trades. I should have opened bullish trades, but I didn't. So then I see price moving up again, and I'm like, okay, so now we're targeting this. 50% of this, at least, right? So I put an entry here, I put an entry here, I put an entry here, I put an entry here. And I believe I had one more entry somewhere. But there was a total of 5 entries with 2 contracts each on micro. And then we saw a few of my entries hit with this candle. Then we see this push down, and then we see a pullback. And then I told myself, I literally said, we might actually end up taking out this high and create a turtle soup. And that was a very viable and like useful thought process, right? After seeing that, I should have dragged a few entries up to here, these levels, and then had my stop loss up here. But instead, I left it where I was because I married the thought. I married the belief that we were going to be bearish from these PD arrays, right? And instead of taking my critique and understanding that, hey, this is very possible and I could just limit my losses, I just married the thought that this was going to be my stop loss and my entries would stay down here. And then look what happened. I get stopped out. I stop the video. I go post a video, and then I come back to see it. We make 160 point drop, and we take out first TP and second TP, right? Well, first and second if I were in for an actual trade. I was only in for $918, which, I mean, because I lost again, I could have also just gotten back in and then targeted a little bit more. Because I lost total 627, right? So 750 plus 627. I would have needed to target 137 or $1,377. Divide that by $5 because I would have gone in for 10 contracts, right? I would have targeted 275 points. Let's round it up to 276, not points, ticks. and then divide that by 4 ticks per point, I would have only needed 68 points. 68 points, let's round it up to 69 points, and then let's round it up to 690 just for slippage. I would have been perfectly fine. I would have been great. Um, and on the day, I said we're targeting 275 to 325 points. So far, we've made 188. I believe we do go lower than daily lows. I believe we go to like 280s. Um, I don't know why I didn't take these trades, right? So let me continue to write down notes, right? Um, let me see what else. Um, okay, so next thing I should write is about my critique, right? If I'm in a trade, or looking for a trade, let's not say looking for a trade, or waiting for a trade, right? Waiting for a trade. A trade to enter. Um, Understand my critiques. So understand your own critiques. God, my big ass forehead is probably showing on that screen, huh? Understand your own critiques, and if it is highly likely or something not out of the ordinary, sorry, ordinary, um, and you can help it, change your idea, your trade idea, to fit the narrative. Um, was thinking of writing one more thing, but I am not gonna lie, I completely lost the thought. Uh, oh yeah, yeah, yeah. Don't marry the thought. Don't marry as in Marry. Thought of another trade because trading is all about probabilities. And if there is a higher probability of losing, then you need to re-evaluate your idea. Right? So basically, don't don't be stubborn on one trade idea because that was your initial analysis, right? So put it in terms that make sense, right? So your initial analysis, trust it with your gut, right? But if price indicates something to you, right? If price tells you you're wrong, don't marry the thought of taking that initial analysis and only trading that, because then you lose, right? So my initial analysis back here was bearish, right? I see mostly bearish in Asia start, right? Not much movement during London protraction, but London delayed protraction, we see bearish movement, right? Um, and then we see price move up here, but then break down here on the 30-minute time frame, right? So then we're looking at market open. We see market opens, right? And then we come all the way back down like this, right? And we close on the 30-minute time frame. What makes you think that that movement, right? That closure on the 30-minute time frame right here. What makes you think that big ass wick is going to say, "Hey, let's continue bullish," right? Nothing really. It doesn't make a lot of sense to continue bullish after a pullback like that. So we then see velocity here, consolidation. Velocity here, consolidation. We see velocity bearish, but then a pullback. So what does that indicate already? That indicates we're going to be moving bullish, but we're not going to be taking out crazy liquidity zones. We're not going to be taking out the most extreme of extremes, right? This right here would be an extreme. This would be the extreme buy side liquidity. I would put it as long-term buy side liquidity. It's short-term, but it is the extreme, right? And then our first entries were right here. We see this push and then pull back. Again, what makes you think we're going to see a wick like this, of this size on this time frame, right? 23-point wick, right? The size of most other candles, like this one. This one's probably 30 points, 25 points, right? It's about the same size as that candle. What makes you think that we're going to push bullish, or we're going to push bearish from here? Nothing. It makes no sense, right? And then we still see closures above these PD arrays. We see closures up here. We see unwillingness to use order blocks, unwillingness to use liquidity zones. What does that indicate? That indicates we're going to take out some form of liquidity, right? But we don't have enough velocity to take out extremes, right? If we have velocity like this right here, 11 bars, giving us 114 points of movement, maybe, right? But instead, what we got was this, which was 110 in 17 bars, right? Now, it's not much more in terms of bars, but it does an equal amount of movement in still more bars. So we see more bearish movement, more bearish velocity than we do bullish velocity. And we can clearly see the movement here is just velocity, consolidation, velocity, consolidation, velocity, consolidation, right? And at this sweep of liquidity, at this high right here, we could have indicated with this bearish closure and consolidation that we wanted to move bearish right after, right? And that should have been known from the start because we see the signs here. We see all the signs, right? Bearish velocity, very slow retracement. Bearish velocity, very slow retracement. But this doesn't retrace. This ends up doing a turtle soup. But I also expected that. I saw it and I said, this could potentially take out this high as a turtle soup, and then we could see movement lower. That's exactly what happened. We took out this high as a turtle soup. We didn't take out this high, this extreme here, and then we move extremely low. We move all the way down to my second take profit, which was Asian lows. And I wanted to see daily lows getting taken, but we still potentially see a bullish close because on the daily time frame we see that we've closed bullish mostly for the last 20 days, aside from like 2 to 3 days. Yeah, last 20 days we've had only bullish except for 1, 2, 3, 4 bearish days. That's it. So we could still potentially close bullish, which, I mean, it doesn't matter really, right? I would have been able to catch these at the very least. But yeah, of course, I married the thought, and then, okay, so first, this was a stupid trade. I should not have taken it. I could have taken anything within the 50% and lower. I should not have taken this trade. This trade, I had married the thought of seeing bullishness down here. I didn't take any bearish trade, right? And then down here, I got rid of my bullish trades, and I completely disregarded everything, and I should have taken a bullish trade and been done with the day, but I didn't, right? And then the next trade, I married the thought of having these PD arrays stacked up right here, all of these PD arrays, I married the thought of seeing it react from these levels. So when I made the critique and analysis that this buy side liquidity here could be taken as a turtle soup, I completely neglected that and I just pushed past it, and I could have 1,000% won, right? And even if I didn't change my trade, I lost here. I knew what was going to happen. I should have taken another trade, but at the same time, I'm kind of happy that I didn't, because one, it taught me a couple extra lessons, and then two, it shows that I have restraint and risk management when it comes to over trading and over leveraging my trades. Um, yes, I could have gone in. Yes, I could have wiped out my losses and made my profit. Would I have been happy? Yes, but am I still okay with it? Yes, because I don't want to trade emotionally just because I missed out on the movement. Yes, I'm a little mad, but I don't really care too much. Let me drink water. Stay hydrated. Um, but yeah, to marry the idea um of your trade, to just stay stubborn and say, "Oh, my original trade is right." It's good to have confidence, but it's bad to have arrogance, right? And what I did here was an arrogant trade. I thought that, you know, even though there's the potential, I am overconfident in the fact that this trade was right, right? I should have had confidence in my direction, because my direction was absolutely correct. Having the confidence in the bearish direction would have been exactly what I needed. Um, and having the confidence to change my trade outlook to have a bigger stop loss would have been 10 times more valuable to me than the confidence of holding this trade right here, right? I I got in at these levels. My average was around here, and my stop loss was here, right? My target was only about, I think, this much. It was 49 points. Um, and all I needed to do really was uh, drag stops up to here, maybe here. This would have been a 1-to-1. It would have been perfect, right? And if even if I had lost here, right, I could have seen I don't know, an entry like right here when we close below the order block, come back in, or this one, right? And then I could have had stops here and then targeted a little bit more because I was losing more, right? Um, I mean, yeah, let me write that down too. Um, over confidence is good. It's good to have, but arrogance will lose the trades, right? And then have confidence in your direction, but be confident. Put that in all caps. Be confident in changing your positions to a, a win. Right. So each day that I trade, I journal at least one page. Right. I actually try to do at most and at least one page, just so I have enough pages to continue for a decent amount of time. I might get a pencil soon for my iPad so I could have infinite notes. But yeah, so always reread and review your journal so you can reflect on your trades and remember what you wrote down, right? In this case, I'm gonna rewatch the video. Um, so that is that journal part is done, right? And then the next part is a trading calendar, um, or trading journal on some device so you can. Why did it just lose? What the heck just happened? Okay, so yeah, so I have a trading journal right here, and I have a trading calendar, which I already showed. This basically just uh keeps track of my account because yes, I have. Oops, that's not. Okay, well, I have my account on here. I don't want to log in and give everybody my details. Um, but yeah, I have an account here, obviously. Uh, but it doesn't really show everything that I want to see. So on here, on my Notion calendar, I can't transfer it because it's on my MacBook. But I will show the screen. So I'm gonna have a. I named the account because this was a fresh account that I traded on, and it was an initial of 25,000, right? So 25, 1, 2, 3, 25,000. Um, my goal was 1,500, which actually isn't even a lot. I could have gotten that in one trade point, but you know. So yeah, it shows. I don't know if it's going to be easy to see, but it shows my initial balance at the top, current balance right after that, and then my goal is right here, which is $1,500, and then down here it shows the goal progress. Then at the very bottom, I can add my trades and add screenshots of my trades, which I'm not going to add screenshots because two separate computers again. Why is it? Why is it okay, there you go. So now I named the trade by date. So this is 05 11 2026, right? I put the date, and then the pair was NASDAQ. Direction was long for the first trade. Account was the take profit account. Session, it was New York session. Risk, um, percentage wise, I don't even know how much I was risking. My entry was like right here. My stop was like right here. Oh, my entry was a little bit more. Right, stop was like right here. Um, I don't even know how much I was risking. Percentage wise, I don't know. So I'm gonna skip the percentage risk. My RR was about this. It was about 4.34. So 4.34. Gross P&L was negative. I wish I could see actually. I really do. But this doesn't really show. Yeah. Well, okay, so I know my first trade I had 918, 919, so minus 750. First trade was locked at 169, negative 169, right? Um, so yeah, it says I can add a photo. I don't want to add a photo, too lazy, right? So then that's done, right? So now it shows up down here. Um, it tells me how much I lost, what date I took it, the session, the pair, what direction, if I won or lost, and then it adds it to the account. which now it's showing I'm negative 169 on the account because I haven't added the second trade yet. Which the second trade, so 169. So I lost a total of 627 minus 169, which is the first trade. So the second trade I lost 458, right? So the gross P&L of that one was 458. Okay, and then that trade, I need to put. Okay, so I'm gonna. Hold on, let me switch this up a little bit. I need to put the time because I take multiple trades, right? My first trade was at this candle, which was 935. So let me put 935. Okay, and then the second trade, I think it's 05 11 2026, and this trade was at it started at 10:07 a.m. So still Nasdaq direction was short. Section London close. Yes, it was London close. Risk reward ratio wasn't even bad, but it just wasn't a good trade. So my average was around here. Yeah, I was targeting about 50, and then my stop loss was about 20. So it was like 2.34. 2.34 risk to reward. Gross P&L negative 458. Yeah. So now it should be 373. Yeah, perfect. 24,373. So yeah, now the account shows negative 627, which I'm down 42% on the account. Wow, I thought I was only down 30 something percent, but it's fine. I can come back tomorrow easily. Um, so yeah, my account balance is now at 24,373. I'm negative 24% on the account, but it's okay. This is me still on my journey, still learning, still trying to gain consistency, right? And it's gonna be much better. Why did it? Why did it do that? Why did it just? No, I just accidentally. Uh-oh. I won't do that. I won't do that. I don't know. I messed up something. It's not gonna affect me really. I don't care. Um, but yeah. So big three lessons that I learned today. First one is trusting my initial analysis, um, in direction wise, right? Because I said we were gonna be bearish. Uh, did I take a bearish trade? I did. But did I start off with that? No, I didn't. Second of all, don't marry the idea of a trade just because it's not always going to turn out right. Uh, and then three, have confidence in my direction, but don't have too much, but also have confidence to change the positions of my trade when there is a critique or when price is showing me that we're gonna want to do something else before my idea hits, right? Because I would have been absolutely perfect today. I would have been beautiful. I would have been done. I probably would have been done here if I had not married the idea that I wanted bullish, right? If I had just taken the bearish trade up here, it would have been fine. But yeah, overall, not a terrible trading day, but not a great one either. Could have done way better, but that's what I'm doing this for. So hopefully tomorrow we can do a lot better, and tomorrow I will record another one. But yeah, Stay. What was I about to say? I don't even know what I was about to say, but I will see you tomorrow.